Mortgage rates near 6.5% are still limiting what buyers can afford, and buyer demand is not grown enough to keep pushing prices higher. Because of that, more sellers are adjusting their expectations. Instead of holding firm or pulling their homes off the market, more sellers are negotiating. That gives buyers some relief without causing sales to collapse. In fact, pending sales rose 3.7% from last year. New contract signings increased 2.6%, and contract cancellations remain lower than last year. That tells us buyers and sellers are still finding common ground. Inventory has increased about 1.1 million homes, giving buyers more options than they had last year. But nationally, inventory is still more than 11% below the pandemic levels, so we're not fully out of the housing shortage. The biggest takeaway is that the market is highly regional. Prices are still up from 2022 peak in the Northwest and Midwest, where inventory remains relatively tight. But prices have fallen in the South and the West, where buyers have more choices and more negotiating power. That means local conditions matter more than the national headlines. Homes spend a typical 53 days on the market, which is right in line with both last year and pre-pandemic averages. Price reductions also increased from May, actually lower than a year ago, which suggests that the sellers are pricing more realistically from the start. Here's what to watch next. Are price homes sitting longer? Are price reductions rising faster than usual? Are the new listings continuing to grow? The bottom line is this. Housing market is not crashing, but it is changing. High mortgage rates are forcing sellers to be more realistic. Buyers are gaining some leverage, and inventory is improving in certain markets. This is not an easy or affordable market. It's a slow regional rebalancing between buyers and sellers. What are you seeing in your area? Lower prices, more inventory, or continued competition? Share your experience in the comments and follow for more housing market updates.